What's up? What's up? What's going on, everybody? Welcome to my channel, where we talk about all things forex, crypto, stocks, just investing, in general. Right now, I want to get straight to business, talking about the Australian economy. Right now, this is just strictly forex, which is my main love, my first love that I came to while getting into the market. So, right now, this is the Australian index. What I look at, just like we have the DXY for the United States. Um, there, you know, I have indexes for different currencies, right? So let's get straight into it. I noticed here, and this is my Discord channel as well, called Wingate Invest and Trade Vibes. Definitely let me know if you want to join the group. It's definitely free. I just love to share knowledge. Want to meet people in this space, to be honest with you, and just share what I know. I've been in here for like 4 years that I've been trading. So yeah. So anyway, right now for the Australian dollar, one of the things that the RBA is looking at, which is the central bank in that economy, and it's called the Reserve Bank of Australia. And I noticed that they're supported by the strong employment data, which reinforce RBA careful approach to monetary easing. So a lot is said there over time. The more that you watch my videos, it'll get more simpler. But for right now, that means that RBA is not doing any type of interest rate cuts. So they said that it's more data dependent. So right now, if I'm not mistaken, they are sitting at, put up some notes real quick. Zoom out of that for a second. So right now, as far as the interest rates, let's see, they are sitting at 4.1. So they came down from 4.35%. And right now, they still, if I'm not mistaken, they even said that they're still restrictive, right? They're in restricted territory. Um, I don't know if that's more of a hawkish tone or a dovish tone, but they will still have interest rate pretty high. And I noticed that they've been doing a little bounce back, but I'm also looking at the nature of this index as well, right? So starting top down, first thing we're going to look at is the manufacturing sector. And some of this stuff is old, and the only reason for that, I took a break from trading because the market was so uncertain, and I was starting to lose money. So just know when to pull out, because I think that is the advantage that you got as a trader, where you can trade when you want. So right now, I just came back early February. Wanted to start trading again, and with forex, there's certain pairs that you can trade in this environment, and whether So we'll get into all that right now. Just want to show you what I have for the Australian economy. So coming in for manufacturing PMI for January, they just came into uh, expansion territory. They above 50 is expansion, which is a good thing for the economy. Anything below 50 is pretty bad. The economy is contracting, and that's not good, right? You see, the previous was 47.8, amazing comeback, even more resilient than the forecast, right? And this is the number you definitely want to pay attention to here. And I think so. As you can see, how everything is outlined, I take notes. I take a lot of notes, and to me, it took me a long time to bridge the gap, but it gives me a better sense in my trading and what I'm looking at and what pairs I can be specific with. And that's where fundamentals come into play, where um I started off with just doing technicals, and then I end up blending fundamentals, and I can't trade without fundamentals now, to be honest with you, right? The fundamentals is why price move the way that it moved, or what's going on behind the scenes, or why it moved that way. Technical analysis is what has happened, right? Technical analysis is the what. So I feel like this little bump occurred really is because my thoughts is that um it's this is possibly because demand is in better balance with supply now with global demand dampening. Australia economy relies on global trade. All of us do, really. All of the countries do. Most depends on it more than others. I know Australian is one of those economies as well, with Japan and China. And I think now the economy can run at a smoother rate now since demand is coming down. It's always about supply and demand. Again, I don't know everything. I'm still studying. I'm still learning. And I'm not a financial advisor, by the way. So anything I say, you go study on your own and tailor it and make it fit towards your trading. I'm not a financial advisor. I'm just like you. I'm trying to figure this out, decode the matrix, right? If you know something I don't know, share it. And that's why I'm actually creating this space right now. So coming down to services, PMI. Um, so services is dealing with the demand of the economy as well. And I noticed this was pretty strong, right? It's dealing with demand of Australia, and it was strong. Composite is strong. Composite is in general services and manufacturing put together in one index, and that's in general. Right now, that was pretty strong as well. So that looks pretty good. Um, and services also will be dealing with inflation, right? Services, you buy a product, you buy a service, you spending money, inflation's going up. Um, this business confidence took a nosedive at one point in time, and it improved so much, um, and it's stronger than the forecast. My question would be, why do businesses feel like that? What are they seeing that they feel that they're optimistic about the future of the economy, right? And so that's what I'll be trying to get to know and understand as well because it show up in the charts, right? So um, it says so businesses feel optimistic about the future and outlook of the economy. Analyst projections for the outlook slash state of the economy, pretty much the same thing. I'll be trying to write everything down. The next reading is March the 12th, right? So I'm gonna be looking at context clues, like what I said, complements that. What complements this data? Next prediction. These are the things I'm gonna be looking at to see what this number will look like and possibly trade, right? Um, so the central bank. So I look at the central bank videos because they're very informative, to be honest, and it's really a cheat sheet in a market. It really is, and people don't even know that once you understand and interpret the data. So it says certain surveys say that business margins being a are being squeezed a bit, which suggests the demand is not strong enough for them to pass on to the consumers. Risk premiums are quite low, equity markets quite high. My thoughts, I feel like things are increasing possibly due to both foreign and consumer demand is dampening and it is now in better balance with supply. Because in Q3 and Q4, and probably Q2, but Q3 and Q4, um, the demand in this economy was exceeding supply, and that's a problem. And I forgot what it caused. I don't want to tell you the wrong thing, so I'm not going to say it. But it caused a certain effect in the economy. But now it seems like it's better balanced because everything that's going on with Donald Trump and everything it put everybody in uncertainty, and you want to know for certain about certain things. You can't you can't make moves without understanding what the future will look like, right? So I feel like that's where that is actually coming to play, but I'm taking that with a grain of salt because we don't know how Donald Trump is going to actually do with these tariffs. Moving on to Westpac leading. Um, let's see. I want to see what this is dealing with. Usually have a definition. Okay, definition. It's of the economic activity combines a selection of the economic variables that typically lead fluctuations in economic activity into a single measure that provides a reliable, oh man, don't let me say that, y'all. Indicator for the Australian economy. So yeah, this look like this is dealing with the stock market in their economy. A couple of things actually. So this is to me a very important economy data point, excuse me. And let's go back. Is declining because of demand. Yeah, that makes sense, which could decelerate inflation as well. And that's what the RBA is actually looking at. They're fighting against inflation as well, and they scared that it may reaccelerate. Um, you got the projections here. You know, you take a look, and in the meeting, I know that the what is her name? The central banker. She speaks for the economy. She was just saying that the projections is overly optimistic. So she's not even taking that in consideration. That's something. Um, Retail sales I haven't recorded since then September. You see that, so I'm not looking at that. However, the consumer confidence came out, and this deals with consumers feel uh, either pessimistic or optimistic in the economy. You do see here that it was pretty weak. You know, it definitely did not meet expectation whatsoever, but it did increase over the previous. Same here. So, and let's see what the central bank says. So, certain surveys say that business margins are being squeezed a bit. So we just read that. Sometimes I repeat it just for me to remember and take the story to the next data. And I think this is different. Where the cost of living pressure, uh, the cost of living pressure still remains in the economy. So this is interesting, right? Though even it got better, consumers really not that confident, and it is below a 100 mark as well. My thoughts: consumers could possibly feel uncertain or not too confident about the future dealing with Trump tariffs and productivity in Australia. For real. So now, when you see this here, these are additional notes, and these are articles that I read, and there's certain there's going to be a video that I do later on to let you know the type of websites I look at when looking at fundamentals and incorporating in my trading. And it said the improvement was led by increased optimism about the short term. So interesting. So possibly that Australian dollar could increase over the short term economic outlook, right? Oh, over the next 12 months. So we'll see that. We'll see that. Let's take a look right here, right? We had a low. This is at a weekly time frame. We had a low right now, right? Interesting. It's consolidating, but it's at a weekly support. Now, I already have some drawings here. Let me move this up. I already have some drawings here, right? Because right now, I color code my charts. I'm not going to lie to you. It's on the monthly. And it hit here 3 times. 1, 2, 3. Okay. Look at the candlesticks. What are we looking at? Right now, because this was dead on arrival. Right here, this candle. Right? Don't this look like a morning star that's forming on the monthly? Okay. Let's break it down to the weekly. A lot of consolidation right here. All right. Break it down to the daily to get more details. So right now, overall, we're in a downtrend, and that does make sense because Australia economy also goes off of um, China too as well. So right now, it hit a point. Look at this. It hit a point. Look at that line chart. Okay, there was some resistance right here, possibly. Right, look at that daily. That's a bearish engulfing. Put this back on. Let's see where I'm at. Okay, hit a resistance. That makes sense. Break it down to the 4 hour. depending on what type of data that comes out, either it can drop down to here for real, sell it all the way down to here, or what is this? Oh, why would I put that right there? You might as well remove that. I don't know where. Then again, that was on a daily. That's why I put it right there. Okay. Back button. Let's go back. I use a line chart to see more clear structure. For real, what's actually going on. Sometimes the candlesticks can get a little bit noisy, right? So right now, it looked like it's going to pass it. And engulfed all these candles right here. So I would like to see how it reacts to this level. We'll definitely see. Time will tell. Or it can pop and go up. So we'll see that. Now, kind of coming back into it real quickly is that when the reports was coming out and when the RBA actually had the central bank meeting, they was talking about how let's just go to it right here. So sometimes when I listen to it, I write it down, and it says the strength of the job market has been surprising. The labor market is tight, which is good news for the job seekers. But for the central banks, this could stall or prolong the disinflation process. We are alert that full employment could be much higher and still have a relatively sustainable low inflation, which could be good, and that'll be actually good for the economy. So the disinflation process right now with economies besides Japan is different, is that they're fighting to get inflation down, right? Because that'll make the cost of goods go up and all types of stuff, right? So they're trying to get that down, and they increase rates to try to restrict people for spending so much money, because that is a portion of what causes inflation with many other things, right? Gas, groceries, insurance. Those are things that make inflation go up. The housing market, right? So right now, though even it ticked up the unemployment rate, well, and also an employment change where this is pretty much people searching for jobs or creating jobs, but if it goes down, if it's in the negative territory, it's not good. Or if it goes down, right? Because that means you're losing more jobs than you create, right? But if this number increases or in the positive territory, that means there are more jobs that are being created than lost. People losing a job. And so, though even these are bad, but by historical standards, I think they still tight. By historical standards, look at the full time job. It made a killer comeback. Part time jobs actually went down, but the full time jobs came up. Participation rate is dealing with demand as well, the capacity of things. And so my thoughts with the full-time employment strong, with a strong bounce back, participation rate stronger than expected, data possibly came from the demand being better in better balance with supply now with the global demand dampening. All this stuff ties in together for real. And you can start to take advantage of certain trades, whether it's a short-term trade, a long-term trade, swing trade, a day trade, a scalping trade, like it's things behind that which I love, right? Let's see. So you seen that UE did check out, which is the unemployment rate, and then from one of the articles it said it's still not easy to get staff, indicating persistent hiring challenges for businesses. Employment change, the deceleration in employment growth could indicate a stabilizing in the labor market, which is a good thing, aligning with the recent RBA commentary on maintaining a restrictive policy stance until clear demand cooling is observed. Right, employment growth outpacing population growth of 0.2%. This is awesome stuff. Definitely want to keep an eye out on balance of trade, but the latest one hasn't came out yet. You have the commodity sectors with prices. Australian deals with gold, iron ore, and copper. That is very important because recently Donald Trump just slapped some type of tariff on that as well. Yeah, so inflation, that's not this here. Just recently came out. It said the central bank said that the board needs to be confident that inflation is returning back to target range sustainably. Headline inflation deals with the expectation of inflation, not actual inflation. Underlying inflation deals with the measure of the pulse. We want to see more information, particularly on inflation in the labor market. So in these meetings, they giving you what they're taking a look at, and we can base our trades off of that, right? It's just that people don't want to look at those videos or they don't understand or know what they talk about. Look it up, get to understand it, get to know it. Do your research like we do research on everything else. Use Chat GPT. It's no excuse. These people be having meetings about us. Let's start to understand this stuff so we can be better equipped and then also make money on this at the same time for real. And it might be messed up for real depending on how you look at it. But at the end of the day, it's a reason why they ain't actually teach us this in school, right? Um, so from one of the articles, and this came from Action Forex, it said the central bank emphasized that monetary policy will remain restrictive even after today's reduction, warning that if rates are eased too much too soon, disinflation progress could stall and inflation could settle above the midpoint of the target range. So we know right now with the RBA, that is the key focus point is is the disinflation progress for inflation to continually actually go down before they decide a rate cut. Um, so the housing, I don't think anything else came out in the housing, but I did make some notes here that we actually kind of went over already. And so let me look at the charts. There's going to be a couple of things to look at, but right now I'm guessing it's really unpredictable and it really depends on what is the data that come out day by day. To me, the pressing catalyst of the market right now is Trump. The talks about Trump, the tariffs, the Russia and Ukraine, the every I think those are the two things that's going on in Q1, the themes of the market that we should actually take a look at, right? So right now I'm just monitoring the Australian dollar. I The way that things is, I really don't see it being a risk on type of market, but sometimes you just see it flip in little nuances. And um, I guess for right now, I'm just going to stay hands off a little bit. I'm looking for it to go up, but it's going to be subdued. It's very limited on the upside because after a while, in March 1st is coming around. I know that Donald Trump was saying certain things, so we'll see how that go. It could possibly sell down here, which I'll be taking a look at. It possibly can break here, but what is the data that will actually have it to break? That's what I'm taking a look at. So, I know this was a pretty long video. You know, this was my first video, so I'm gonna get a little bit more organized, better with time. But this is my breakdown on what I do sometimes when I assess the market. So until next time, peace.